pairs hold their breath in anticipation of the Fed interest rate decision. The British pound showed a slight edge, however, with Bojo announcing more easing of lockdown measures in the UK. However, prospects in the Eurozone start to look dire with a predicted 9.1% drop in economic output, according to the OECD. Will the NASDAQ reach 10K before Bitcoin? And will we see fireworks or campfire flames today? These questions and more will be answered in today's exciting episode of Breaking Bitcoin.
Hey guys, I'm Erez with Blocks, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency markets and personal finance. Hopefully everyone is doing fantastic today, wherever you happen to be and however you are watching us this fine Wednesday afternoon. Before we begin, we've got so much to talk about today, but today's show is brought to you by the Kraken Cryptocurrency Premium Trading Group. With everything going on in the world, there has never been a better time to learn how to navigate the markets. Whether you're interested in cryptocurrency, Forex, stocks, derivatives, the Premium Trading Group has you covered. You can join our community of professional traders and learn how to build your own objective, data-driven strategy. If you're tired of trading with your gut or watching poor discipline and trade management sap away your progress, make the change and join us at premium.crackingcryptocurrency.com. Links are down in the description. We've got so much to talk about today, guys. Obviously, we got a Fed interest rate decision coming out. We've got NASDAQ mini futures doing their thing, but that's a NASDAQ proper. We'll be looking at the indices. We'll be looking at the cryptocurrency markets, looking at Bitcoin. Generally, the malaise of the cryptocurrency markets is starting to set in whenever kind of Bitcoin does this, and those that aren't playing altcoins, it's a pretty deep and strong malaise, right? And eventually, well, how do I put this? We can just go back in time. Probably, to be quite honest with you, the area of the market that this most reminds me of with overall range consolidation, although slightly different because we're at resistance consolidation. Previously, we were at support consolidation. So if we want to kind of flip that on its head, would be back in at the end of 2018. Back in October, before the significant drop-off, we entered into that extremely tight range, saw massive price compression, saw massive volatility compression, and price ended up breaking to the downside and in a significant way as we dropped from around 6,000 down to 3,000, where we consolidated for about a month and a half before beginning to move to the upside for 2019's Q1, Q2 bull market. And then obviously through the rest of 2019, we listed lazily to the downside, culminating with a slight pump in there back up to resistance, 9,000 and 10,000 acting as strong resistance, the area where price continued to return to for the back half of 2019, early 2020, until, of course, the March meltdown, where we reached, again, lows of 3,000 almost. And now we are back up at 10,000. So kind of the scanning crypto Twitter and just, kind of reading the mood of technical traders out there. It's very, very bearish, right? Most commentators on crypto, I kind of watch my tweet deck, right? And it is generally overwhelmingly like individuals getting, in underwater shorts, underwater longs, or continually getting stopped out trying to trade, momentum breakouts of the range. We talked about this yesterday. We talked about things to watch for. So we'll break that down today when we look at the charts and look for potential trade setups. But this might seem a little like brushing it off the cuff or whatever. But for that reason, and for everything that's going on, certainly my bias remains and is still more to the upside, right? I've talked about my exposure. I've talked about my positions. I do have a long exposure open on at the current point in time. And if I wanted any justification for that, it would just be the simple reason that most individuals, at least most technical traders, right? Most individuals that do a lot of chartistry and draw trend lines and all that kind of fancy stuff. The prettier your charts are, typically in my experience, the typically the smaller position sizes that you're trading with, if you even trade at all, right? And I'm not really denigrating anybody, but I am just generally trying to do my best to call out crypto Twitter for individuals, that don't really trade that much, that don't really have a whole lot of skin in the game and just like to produce pretty charts. So Pretty charts do not a profitable trader make you. At the end of the day, the only thing that makes you a profitable or unprofitable trader is your equity curve, is your actual P&L. And that is what all winning traders measure their success in. Not necessarily in hit rate, not necessarily in percent profitability, but in their equity curve. However, I think that as you mature as a trader, and the way that we start traders off in our courses is to focus on those concepts of percent profitability and managing drawdowns so that you can receive the education that will be necessary to continue to trade for a long, long time and make this a long, sustainable goal and either career or side hustle, whichever you kind of prefer. And we cover both things in the courses. So pretty excited. I did get, as you guys know, my big project for this month is uploading all of our educational material. And there is a lot to the Online Trading Academy, which I want to go live in July. So Pathways to Profit is our kind of main course. And we finally have begun to move that material onto the website. And I have the first module up there. I'm quite happy with it. We're reviewing it, making sure I did everything correctly. And then it will be fairly simple for me to drop all the rest of the content in. I really like the structure that we're going to have on the website. It's going to be very easy for current members and individuals who want to join the group and take the educational course. It's going to be very, very easy for them to go through, and in my opinion, because listen, I've worked with a lot of individuals actually on how to build educational courses and write material and put out content. And typically, when you purchase these kind of online courses or this online material, and again, big kudos to you for wanting to improve your life and investing in educational material. It's generally a good investment. You got to be careful though, but generally end up downloading a PDF or you get access to, a private YouTube video or something like that. All methods that we've had to do in the past as well. And what I'm really happy about is this progression of the group and in our company to be able to put everything in a very, very aesthetically pleasing, very easily manageable learning management system on the website so that it's a good, GUI, a good graphical user interface for the user. And it's easy for us as administrators to see on the back end exactly where people are in the course progression and to help them out with customer support as they progress through. It makes it much easier for me as an educator and for my staff as educators. So I'm really looking forward to that. Pretty happy about it. And I'll keep you guys updated on that as we progress. But that's kind of what I'm working on right now. With that being said, if you guys are new to the channel, make sure to subscribe. If you enjoy the content, the bell icon is the literally only way you will be notified when we go live because, YouTube. And if you guys really do enjoy the content, make sure to slap a like on today's video. Let's see if we can get to 50 likes before we even hit the news. Obviously, you can support us on DLive or Twitch with a follow or sub over there. With that being said, let's get cracking, guys. Let's get right into the markets. Cover the kind of introductory news, cover the stuff that I'm kind of watching for today. Obviously, we've got a Fed decision coming up soon, and we will hit the charts. All right, here we are in the live scene. Really thirsty. Really thirsty today. Been up for quite a while working on that learning management system. All right. So before we get into the charts, let's break down today's kind of news crunch wrap up, the stuff that I found interesting. All right. Obviously, coming from the Bitcoinist.com, option traders are nearly all long on Bitcoin. So looking at data from the CME, this says that the majority of CME options are actually long, and this kind of begins to paint. This is one of those kind of typical articles where it's like, oh, this is like bullish, but it could be wrong. Who knows? Make your own decision. Which, granted, right? They're content producers. They want to CYA. They want to cover their bases. But I want to break this down a little bit. It says, dun, 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 dun. Data reveals that options open interest on the Chicago Mercantile Exchange is almost entirely comprised on calls, meaning investors are anticipating upside. For those of you who do not know anything about options, a long call is it's a contract between a buyer and a seller where you have the right but not the obligation to purchase the underlying asset. In this case, a CME contract or Bitcoin. It's a contract, right? It's a contract for difference. At a certain price by a certain date, right? And that price is known as the strike price. So, in this case. And we kind of covered this the other day where we showed that CME calls with strikes between 10 and 11,000 had a massive amount of volume, over $103 million in volume, which was quite significantly high if you look at overall open interest on the CMEs, which is only around 430 million. As far as yesterday, as far as Glassnode showed yesterday. So that's pretty significant, right? That's at least a quarter just by that metric, and I think it's actually a little bit higher. At least a quarter of volume in call options, right? So this is bullish. This is anticipating upside price. This means that if price were to pump above 10, 11,000, traders are willing to pay a premium to buy the right to purchase Bitcoin at those price levels, right? Ideally, assuming the price is actually a little bit higher, you can cash in on your options contract, resolve, and make money. However, we have to, the easy takeaway from this would be, oh, this is really, really bullish, right? CME options are very bullish. Institutional investors are expecting upside. But I just want to kind of counsel this a little bit and say that it's not really that simple. So in the land of cryptocurrency, when we typically look at things like open interest on cryptocurrency exchanges, when we look at, call to put ratios on things like Deribit, or when you look at any metrics like that, whether you're measuring the kind of bullish or bearishness of options contracts or the bullish or bearishness of futures contracts, we kind of have a hidden assumption in there, which is that only cryptocurrency data is relevant here, right? That this data that we're looking at kind of represents the breadth of cryptocurrency traders. More specifically, meaning that the traders that are putting on these positions in this data represents cryptocurrency only traders. Let me put it that way, right? That it represents cryptocurrency only traders. And when we get to the Chicago Mercantile Exchange, I don't really believe that is the case, right? Certainly, many investors are trading on the Chicago Mercantile Exchange for the purposes of speculating on Bitcoin. However, we have to understand, just as students here will know about my personal trading strategy and what we teach, there's webs within webs within webs, right? So, for example, I have a diversified trading account, right? So I trade traditional ETFs, I trade Forex, I trade contracts for difference, I trade cryptocurrency. And, this allows me to do a lot, right? So I can be fairly successful in cryptocurrency one month, whereas I break even or have drawdown in Forex one month, and maybe on ETFs, I don't take any trades. So this allows me to be net profitable. It also allows me, the inverse of that is true. If I have a poor month in cryptocurrency, I have a good month in the other areas, or if I have a decent month, that allows me to bring my equity curve doesn't drop as much. I incur less of a P&L loss, right? So overall, I am more net profitable at the end of the day for my market diversification. This also allows me to go where the volatility goes, right? So as a trader, you need volatility, right, to have a profitable trade. Volatility is the kind of statistical likelihood that price is going to move in a high range, right? There's going to be enough of a gap between your entry and where price ends up going from your entry, or from low to high, or from open to close, that you have the probability of a profitable trade, right? If you insert volatility and volume, you can often get a trend, and you can identify these with indicators, in my opinion. Right? This is the core of my fundamental strategy, that you can identify volume in the market, that you can identify turning points in the market, and that you can identify high profit potential breakouts or momentum trades based on indicators. And I think that is the objectively best way to do so for just about everybody. But we need to apply that to this data that we're getting from the CME, because individuals trading on the CME, just like individuals trading on, let's say, BitMEX, for example, right? Now, I would say BitMEX is a little different because your deposit currency is Bitcoin and your withdrawal currency is Bitcoin. So it's not like you can just speculate from interactive brokers. Whereas the Chicago Mercantile Exchange, the deposit currency is USD. You don't have to have physical exposure to the underlying asset to trade CME cash settled futures contracts, meaning that you can just pick up Bitcoin contracts or options using USD as your deposit currency while you're speculating on other markets. So the likelihood here is that a lot of volume that's on the CME is not actually direct cryptocurrency speculation, although certainly some of it is, and maybe I'm wrong about this, but I would postulate, I'm hypothesizing, I believe, that a lot of the volume on the CMEs is hedging, right? It's for the purposes of hedging. So individuals that have long exposure to traditional markets, for example, will pick up some long calls on cryptocurrency, or Bitcoin in this case, to allow them to form some sort of aggressive hedge position, right? Or some sort of aggressive hedge split on their active trades. Individuals could also be short commodities and long on Bitcoin, or short traditional markets and long on Bitcoin. There's lots of different ways that individuals could be utilizing these contracts on the CME. So while this data is important and relevant, and I would agree with the initial takeaway that this is bullish, I wanted to put that caveat in there because nothing is as simple as it seems on the surface. Okay. And again, the takeaway from this and what I'm trying to get across here is that when we look at data for platforms like the CME, where USD is the deposit currency and individuals do not have to have skin in the Bitcoin game to speculate on these contracts, whether they be futures or options, the relevance of that data to cryptocurrency price movement might be attenuated down to a fairly strong degree. Whereas if we look at data from cryptocurrency exchanges where cryptocurrency is the deposit currency, this means by its very nature that for an individual to even be trading on these markets, they have to have skin in the Bitcoin game, right? You have to buy Bitcoin to deposit it onto BitMEX, to deposit it onto ByBit, although you can now trade on ByBit with USDT, which is really awesome, to Deribit, et cetera, et cetera. Although again, Deribit now is USDT. Come on, BitMEX, when are you going to get in the game? They exist to take your money. That's why. Again, those cryptocurrency exchanges, there is you have to have skin in the game. You have to buy the underlying asset. Now, of course, you can buy the underlying asset and then hedge it with a short contract. You can go neutral by shorting that long exposure. But this certainly is not what the majority of individuals are doing. So, with that being said, and here's the chart, courtesy of Suzu of Three Arrows Capital, showing CME options on Bitcoin futures daily open interest. The blue bars are calls and the white bars are puts. So certainly puts is the exact opposite of a call. Puts are the right, but not the obligation, to sell the underlying asset or the contract at a certain price by a certain date, strike price. So certainly more bullish than bearish, but again, take into account, hedging is certainly a factor here. All right. No, thank you. Now, a few weeks ago, we talked about Bitmain. We talked about Bitmain and so kind of a summary here. One of the co-founders of Bitmain was ousted, and they put a new, I don't know, this all starts to sound like some real, this all starts to sound like some 1984 or CCP drama. And of course, this is taking place in Beijing. But anyways, Bitmain co-founder was ousted by the company, and he came back with armed guards. And we covered him getting into a kind of a, Real Housewives of New Jersey and a slap fight with the individual that took his place, or the other co-founder. I can't recall at this point in time which one it was, kind of out in the streets right in front of Bitmain. So at the time, this was just kind of funny. However, the situation has progressed quite a little bit. So I believe this was the original story. Actually, this is an update to the original story. So that was like a few weeks ago. This is June 4th. So this is just a few days ago. So ousted Bitmain co-founder storms Beijing office with armed guards. His name is McCrae Zahn. He stormed Bitmain's Beijing office on June 3rd. After apologizing to employees, he promised to complete the IPO and value the company at $50 billion. So I guess I don't know how they do things over in China, where you can just like march in with armed guards and be like, yeah, I'm the CEO now. But whatever. Okay. Let's see here. November 2019, he claimed that Jihan Wu, fellow co-founder, illegally removed him from the company. He has since taken legal action against Bitmain and Wu. So, it doesn't really go into detail here about how the fact that this dude just got away with this, but whatever. Okay, cool. So, senior analyst Alexander pointed me to this kind of Twitter thread earlier this morning, and I wanted to cover it. So, this, some of these tweets have been deleted. Some of them were originally in Mandarin, and they have since been deleted. But I was able to keep, or at least dig up, the ones that hadn't been deleted regarding the story, right? So this is from Molly over here on Twitter. It says, after forked Bitcoin, Bitmain now forked itself. The company divided to two after the ugly power fight. After McCree took back the legal control of Bitmain in Beijing, Jihan forced all Bitmain employees to resigned to sign a new contract and for a new company in Chongqing, which I'm assuming is a city in China. All right, so this is the original tweet in Mandarin. So if you guys, or this doesn't look like a tweet, if you guys can break this down. And this is a map of equity shareholders in Bitmain. We can see that McCrae owns 36% of Bitmain. Jihan owns 20.25. And I believe it was Mr. Zhao who ended up taking his place at 6.26. And then we have employee options and other partners right here. Sequoia Capital, Synovation Venture. Yeah. So VC funds right there, owning about 5% of the total equity in the company. All right, now the update, and this is from Cointelegraph from about 5 hours ago. So this is where, up until this point, this is just kind of like, oh, Bitcoin Cash seems certainly doomed at this point in time. But now now we can actually speculate on whether this is going to have an effect on Bitcoin. Because it seems that after McCree took control of the company back, he has forbade shipments of new mining devices. So as of right now, so any miners that were attempting to order Bitmain's new product line or any product from Bitmain, shipments have been shut off as of right now. So in reality, I'm not sure how this will play out. Certainly, I'm not sure how the legal system is going to treat this situation, whether they're going to honor this man's retaking over of the company, or whether a lot of employees or IP is going to spin off from the company with Jihan's new kind of startup company here, or how that's going to be resolved. But certainly it does mean that any unprofitable miners, because we've covered this over the last few weeks, and maybe this isn't really even a big deal because unprofitable miners were already running out of Bitcoin to sell, and profitable miners were hodling their Bitcoin that they were currently mining and not dumping it onto the market. We've seen record lows. We saw 12-month lows, not only of exchange deposits, but also of miner outflows to the markets. So, however, what I will say is that any unprofitable miners who were looking to upgrade or in the process of upgrading, or even profitable miners who were in the process of upgrading mining farms and were ordering from Bitmain, they are going to be currently shut off from their product supply. Now, this might have, it's possible that this will have an effect on Bitcoin's hash rate. Maybe this will be a negative and we will see a dip in hash rate, and this might prolong or delay something like a hash ribbons buy signal, or potentially lead to more market selling of Bitcoin from miners. If they see, if the difficulty adjusts up and then they're kind of flesh out. But in reality, I don't really see it playing out this way. In reality, I think this is likely to be not a big deal because Bitmain is already seeing a lot of competition from the quote unquote free market, from like MicroXBT and other companies like that, Canon Creative. And they're going to step in to fill this void. If Bitmain decides they don't want to ship product, other individuals will certainly ship product and will ramp up production. And, there's been a lot of bad news coming out of Bitmain, right? Where they have utilized, brand new miners and used them for their edge and then sold used miners packaged as new miners. Obviously, there was a report not too long ago where I think it was 20% of Bitmain's new miners were malfunctioning. So maybe this is a good thing overall. And it just kind of goes to show you that, when you get big companies that come in and back forks of Bitcoin, it typically doesn't end well either for the fork or well for the company. And we kind of have that example staring us right in the face right here. So kind of the message here is don't mess with Blockstream. But and again, maybe they will begin shipping new product. This is certainly not a good business move. I can understand wanting to consolidate your power base if this is a temporary movement, but it's not good. If you have demand and you just say, well, we're not shipping anymore, it's not a good business move, Mr. McCree. So I will keep you guys updated on that as we continue to move forward. Here's another article about that same concept. And apparently the entity that owns the intellectual property is Jihan Wu. But Molly says here, there will probably be more fights between them. Bitcoin Cash is doomed. State-owned media CNR, Chinese National Radio, just reported that Binance still operates illegally in mainland China. All started because CZ reposts multiple Weibos posted by Binance China. Okay, so this is a little bit of a different story, but all right. This is our main story we're going to be covering here in a minute. Okay, so if you guys want to talk about fat finger transactions, let's talk about Ethereum. So an Ethereum user paid $2.6 million for one transaction. Here's what happened. It says here, kind of the headline: one most likely inattentive user is the bizarre reason why Ethereum fees skyrocketed to $2.6 million in 1 hour to send just $133. So this, congratulations, you now hold the record for most expensive transaction on the Ethereum blockchain of all time. Let's bring the people in and have a nice celebratory dance every time we blast above a new milestone. In this case, one of stupidity, it seems. Let's see here. Ava Lab CEO says this is a rare case of a quote-unquote goose egg transaction. It was most likely made by mistake. All right. Presuming that the unfortunate user confused the transaction fee with the sum of Ethereum that was supposed to be sent to another address. That's tragic, right? Like, what if that was, just some Ethereum whale? It couldn't have been an Ethereum whale cashing out. Most likely, maybe a high capital net worth individual, or just crap happens, man. Sometimes crap happens. Ousted transactions have happened on the Bitcoin network as well, with one person shelling out 291 Bitcoin for sending just not 1 BTC. Dear Lord. Let's see here. And there's kind of a conversation about how this is harder with Nakamoto consensus. So I've covered this before. Again, this is just kind of funny. And listen, I'm sorry to the individual if you're watching this from the ER ward or the from the recovery ward. I'm sorry that this happened to you. We don't know why this happened. Most likely a mistake. But it just goes to show you, right? Like, I guess it doesn't really go to show anything. Accidents can happen. Mistakes can happen. I've been utilizing Bitcoin for over 4 years now. And not one single time have I ever sent to the wrong address. Have I ever sent an amount that I didn't want to send? Have I never received BTC? Has somebody that I sent BTC has never received it, right? So that has never happened to me. And that is true of literally any chain that I've ever used. I've mostly just used the Bitcoin transaction. Regardless, regarding other chains, I've almost always just speculated on them. So accidents can happen, and you need to be, safe and secure in what you're doing out there. Always just double, triple check the address that you're sending to. I have a little trick where you just kind of verify the first 3 and the last 3 alphanumeric characters. That's better than not confirming the entire string or the entire address. And then just confirming your transaction amount and the fee that you're willing to pay. This is why I like desktop clients like Electrum, for example. Electrum's really good. Ledger Live is really good. The interface for the hardware wallet, which is typically what I tend to use, or Mycelium on my mobile device if I'm out and about, where you can just manually set your own fee. And this is what I like. And obviously the Lightning Network gives you quite a bit of control over this as well. I recommend you guys go check that out. So just wanted to cover that. A little bit of a silly thing there. I don't know how to get this thing to. I don't want to do either. I don't want to continue. All right, so I guess I'm just not going to read this. Moving right along. eToro CEO predicting a market crash within 3 weeks is the safe haven Bitcoin. He says here. So this is eToro's CEO Yanni Asai. And he says that there will be a new stock market crash in less than a month, and investors should pay attention now. So we put out a big series of tweets. He says that this recent growth in stocks was speculative, and a correction is now due. So this is probably the big tweet that he put out that got a lot of attention. There is a crash coming soon in the equities markets in the next 3 weeks. Someone, not sure whom, is going to sell or short their position and crash the markets. Now, I will say this. I'm seeing, this isn't new. I'm actually seeing like quite a bit of this come out. Analysts, and this always like puts me on edge. This is why I don't have a lot of exposure in the markets right now. Analysts, it's very, very frothy, and that makes me uncomfortable. And, instead of analysts calling for new all-time highs, analysts are calling for imminent reversals or corrections at the price levels that we're at. And typically, mainstream media analysts are always wrong. In my book, sometimes they get it right, but usually they're there to tell you why you lost money and not how you could have, and not tell you in advance like how to prevent losing money. So, this would imply to me that here's the thing, guys, never underestimate how long a trend can go on and how irrational the market can be. Right? If you're looking at the traditional equities markets right now, you need to understand one thing. It's not the companies necessarily that are less valuable, although one can make a big argument that, due to lack of product movement and increased, due to the COVID restrictions and lockdowns, that companies are receiving less business and people are going to be consuming less. And there's going to be a fundamental shift in how we consume moving forward. But the reason why equity prices are going up is two reasons. One, the Fed has engaged in widespread quantitative easing. In other words, printing massive sums of money, which debases the value of each individual, which debases the purchasing power of each individual unit of currency, right? The more currency you have, with that a resultant increase in goods and services. And what we've actually seen is a decrease in goods and services. So that is exacerbating the inflation or the diminishing purchasing power of each individual currency unit, the purchasing power of $1. So that is going to be a dramatic change. However, when the Fed prints money, they don't distribute it equally throughout the economy, right? It's not like they just tack on money to everybody's paycheck and everybody just gets paid more. That is maybe a fairer way that they could do things. We could get into that argument on how they could actually distribute this money. But what they actually do is they purchase assets off the open market, generally in the case of bonds. However, now with these special purpose vehicles that the Fed and the Treasury has set up, we now have the Fed buying things that were never in their purview to buy. For example, ETFs and other toxic assets, for example, that commercial banks have been holding on to since 2008 and prior. So what they do is they purchase bonds. Who's the largest holder of bonds? Commercial banks. So commercial banks sell bonds to the Fed in return for vast sums of money, right? Fresh money, printed. That money needs to go somewhere. Banks do not want to sit on money. Modern monetary theory and the modern monetary system hates capital, money, currency just sitting around doing nothing. It needs to be used as the basis for new loans, or it needs to be invested. It needs to grow. It needs to earn interest. It is a usurious system. So where are commercial banks going to put their money? Well, they are loaning some of it out, certainly. But the majority of it is going into asset prices, right? So they are buying equities off the open markets. They're buying ETFs, mutual funds, bond, anything they can get their hands on. This inflates the price. Coupled with this, you also have kind of something for the first time. Obviously we've seen waves of this, but this is obviously quite massive. And this is a massive surge of new retail traders entering into the market. And we discussed this in great detail yesterday. And what really concerns me about this is that typically, unfortunately, retail traders tend to get it wrong. And retail traders have bought this dip in a massive way. Unfortunately, the narrative is that retail traders don't buy the dip. Institutional investors buy the dip. And retail missed the boat and buy at the top. That's not what happened. Retail traders have bought the dip, and institutional investors didn't. Institutional investors have been warning about a stock market decline for the last 3 months. And now we are back up at all-time highs and pushing all-time highs. And we are seeing retail traders get frothier and enter into the markets saying things like, oh, Warren Buffett is, hedge funds got it wrong. Warren Buffett is stupid. It was, I can't remember. I read the article this morning about some trader who made like $200,000 saying that, hey, I'm a better trader than Warren Buffett. I'm sure he's a nice guy, but he certainly lost his edge. I'm better than him. I've been day trading for 3 months. This is, if anything, a huge warning sign typically to exit the markets for me, right? To exit traditional equity markets, to exit growth stocks, right? Yeah. So, however, do not underestimate how long the market can remain irrational, because it can remain irrational longer than you can remain solvent. So, as with any good system or strategy, for me anyways, do I worry about catching tops and bottoms? No. I wait for confirmation of a trend. Because if there is confirmation of a trend, then we end up slipping into a negative trend on equities. And that's going to foretell a significant sell-off. We're going to have advance notice of it with a good technical objective system. That's what I'm going to be watching. And if I get the same signals that I got back in February, then I will be hedging the majority of my traditional funds again via SH, SDS, maybe even SPXU. Never used that one before, never speculate on that ETF, but I had some decent gains with it. However, what I will say is what I'm personally considering right now, and what I think the next big play for me is taking a lot, almost all, if I'm going to do this, of my growth stock investment off the table and set that money aside for the purposes of purchasing real estate, right? Which I am currently engaged in purchasing more of. Real estate is good active income, and I understand that, there's a lot of hesitancy about purchasing real estate at this point in time, particularly rental real estate, which is what I'm going to be doing. because of like COVID and unemployment and all of these things. However, I'm young and I have the ability and capitalization to wait out the market, right? So again, it's timing and patience and purchasing opportunities where others do not see it. I think that is what has made me a good investor throughout my lifetime. The patience and, strategic thinking and systems building has made me a good trader throughout my lifetime. So that's the opportunity that I'm currently considering and postulating on the table. So keep you guys updated on that as well. All right. So kind of that's the opening news, although that took quite a while. It's already 12:40. Sorry, guys. Let's get into current price. There's stuff to talk about. There's stuff to talk about. All right, let's start off on the daily time frame. Cover the simples first. All right. Here we are on the daily time frame. Bitcoin still in the midst of an algorithmic bottom feeder signal. This signal is designed to catch kind of novel and unique reversal opportunities in the market and set us up for an appropriate risk apportioned trade to the upside. Bottom feeder is a long only strategy, so we are currently in that trade. That is the trade that is on the table for us. That is looking at a take profit target of 10,223, stop loss at 90.40. So that's basically all that we have on the table. Wadatar explosion, the main thing, the main news today is Wadatar explosion remains flat. Wada columns below the explosion level, below the dead zone, no volume, no volatility, no trending behavior here. You need volume to initiate a trend. You need volume to confirm a breakout or a breakdown. We have neither. Of course, that means you're going to miss the initial movement, but what you're going to gain for waiting is confirmation. Whereas I know a lot of traders are trying to take every breakout, every breakdown right now in this increasingly compressing range and getting wiped out. And you don't want to be that guy. That is the opposite of what we focus on. Minx on the daily has crossed back up to the upside. This is 3 days of a positive signal. However, no confirmation with anything else. So take that with a grain of salt. Parallax, which is our longer term momentum indicator here, is still bullish, right? Still continues to list lazily to the upside. However, we remain below the baseline. We need to close above 98.32 for bullish confirmation of these trades. 99.21 if you want to use the Keltner channel and be more conservative. Whereas, let's see here. That's basically it. If we were to get a Minx cross under, if Parallax were to go bearish, and if we were to get a rise in volatility, we would have the components that we need for a short. So certainly with the indicators, with Minx and Parallax pointing to the upside, that would hint more bullish. Baseline is bearish and Wadatar is neutral. There's nothing coming from Wadatar explosion. So for this reason, I think the daily swing longs are still off the table, right? Got to be patient. And we are speculating to the upside based on the other signals that we have. All right, let's go look at intraday to get a little bit more detail. All right, so based on horizontal support and resistance, and also good confluence from the delta volume candles indicator here, we do have current range resistance at 98.33. So if you were kind of looking for an earlier entry, if you're on the 4-hour time frame, again, a close above that level on a strong candle body close, that means very little wick with good volume, is often an indication of breakout, right? If you want to be more conservative, you can also go for an open and close above a level of resistance. That's a topic that I cover in our horizontal support and resistance course. Whereas to the downside, we do have horizontal support at 94.47. That's our current range support. We also have liquidation levels there for, I believe it is 50x shorts. Is it 50? No, 50x longs? No, I don't think so. I think that's 25. I think it's the first liquidation level of 25. Yeah, the first liquidation level of 25x longs that entered on this dip that we saw with this, with that Darth Maul candle that we talked about yesterday. So that's about it. Liquidation levels for shorts are between 9,900 and 9,990. Primary liquidation levels for longs begin at 94, like right at range support, and then down lower. Anybody that entered 25x long at range support is down at 93 to 92.50. So take that as you will. On the 4-hour time frame here, we do see Minx crossing back up to the upside as we are consolidating at resistance with continued higher lows and lower highs. So symmetrical consolidation, generally I like symmetrical consolidation or just consolidation at resistance, typically leads to a breakout in my experience. And I know that a lot of people are calling bearish here. That is not the trade that I am looking for on the table. Let's look intraday. Bitcoin did briefly trade back inside the value area from yesterday. And I saw some people tweeting about this morning, that this often leads to a retest of range lows. Yeah, that can happen. Certainly did not happen today. We can see that funding and predictive funding remain negative. And what do we see here? Oh, price and a little bit of backwardation. So we're seeing retail try to short this level. What's probably going to happen? Now, this is a weak signal. This is a weak signal, but it would imply more upside than downside for me anyways. We are consolidating. IsaSpot did end up generating a sell signal right here, looking for that 1 to 2% movement. And we did get that about 0.57%. So again, you would have had to be a little less, you would have had to be a little bit more avant-garde with that, or catch a slightly better entry up here, but about a 1% movement from high to low right there. So not bad for the IsaSpot. So we are currently looking at our current level of like intraday resistance, which is the point of control of today's session, sitting around 97.65, 97.70. Opening and closing above that would most likely lead us to a retest of range highs around that that $9,800 level, which is overall what I'm looking for intraday. Diminishing volume, lack of ability. So there's a couple ways you can look at this. One way to look at this is like the inability, and I think this is the wrong way to look at it, is the inability of bulls to chew through the whatever is above them, right? To chew through the order book that is above them, the limit sell volume that is above them, like the iceberg order, so to speak. Although that's not really an iceberg order. Iceberg order is like a hidden whale order in the order books that you're flying and then bam, you hit that iceberg and you slam back down. This is more just like, you can see it on the order books, like thick sell walls right here. That's certainly one way to look at that and imply like a bearish kind of bias. But the way I tend to look at this is the inability of bears to suppress price down, like overall, like where is price listing to? Price is listing to the upside, right? Sellers continue to market sell price down, and every time it gets bought back up, and push back at this resistance level that we have tested over and over and over and over again. And the lack of volume, the lack of volatility is just indicating range suppression. What that means is that there's already a lot of position buyers and sellers on both sides of the market. And eventually, there is going to be a large market sell, either it's a market buy or a market sell. And that is going to push price. Individuals are going to start getting liquidated because that is going to be a high momentum move. Retail traders on the sidelines are going to be coming in and FOMOing, and momentum bots are going to pick up the trade and start trading in that direction. And we're going to have a good old fashioned breakout on our hands. CME futures looking very much like Bitcoin right here, beginning to set up this range, right? Lower highs, lower lows, but overall holding that range support. Looking at the ES mini futures, holding 31.85 and 32.27 acting as resistance so far, so no massive breakout here. CME futures on Bitcoin remain bearish as we are below the baseline, need to break above 10,180 for that CME signal to the upside. And we can see that more massive spike in backwardation right here as individuals did attempt to market sell into this order. We'll see if they get liquidated or not, because their positioned entries are right around 97.65, 97.60. This is where we have a lot of entries into shorts, basically selling at previous support turn resistance. All right, let's look at the secondary system that we've been talking about and building kind of together. I feel like we've done it together. So this is a system, and I wanted to clarify this, right? Because we had somebody email support the other day, and they said, "Hey, man, you said these indicators were all publicly available." Well, they're not really, but you can recreate this to a certain degree, right? So I don't really like handing people strategies. I prefer to teach people how to build their own, because nothing worth having is easy to build, or anything that you get given for free you tend to not value, and it tends to not perform for you. So I've handed people, I used to do this, I've done this, I've handed people winning strategies, and they don't appreciate them. They don't use them properly. They take too much risk, and they end up blowing out their account. It's just not that simple as getting something that tells you that has a high hit rate. All right. Obviously that's something that we're focusing on with our automated strategies, but at the same time, you need that education and comprehensive understanding to really appreciate and utilize this tool in the right way. So anyways, we got here a Donchian 26, aka the Kijun. Now this is a modified version of the Kijun, I will not lie. However, the Donchian is going to get you pretty close. So you can use our Ichimoku strategy if you want to do this, and just set your baseline length or conversion line length to 26, or you can set your Kumo Cloud length to 26, however you want to do it. That's going to give you a nice baseline. True Strength Index is a public indicator. Time Transformation is a proprietary indicator. It works differently from Fisher Transform because it's based on Fisher, but not quite Fisher. But you can use Fisher Transform and get some decent results. And DMF, this is a public indicator. So all of this stuff is all of this stuff can be utilized. So here we are. On this, we are above Donchian 26. So this would be hinting at bullishness. Time transformation is crossed to the upside, and dynamic money flow is positive. All we need is our longer term kind of lagging indicator here, True Strength Index to cross to the upside. And we are getting closer and closer and closer. I think that's going to likely occur if we get that nice volume breakout to the upside. Things will be gamed and primed on this system to be taking long swings to the upside, looking at take profit targets of 11,000 to 12,000 in the interim. All right, let us look at the majors together, guys. Ethereum, obviously big bullish fundamentals coming out of Ethereum, but we remain in this consolidation period. Things do look positive. However, I am waiting for a strong signal, and I'm waiting for Bitcoin to take the reins on Ethereum here before I take any, for myself anyways, any additional major to USD risk trade. That would be anything on ByBit and pretty much any of the major USDT pairs on Binance. However, I am allowing Alex to trade the account, and he's doing quite well. So I will certainly give him his due. EOS USD listing lazily back down to the baseline. No objective signal to do anything here. No short, no long, absolutely flat. XRP, please punch me in the face. XRP setting up for a short, but we're not quite there yet. So don't get faked in. That's about all we have for the major cryptos today. Let's go over and look at indices as we normally do. Looking at the DIA, we did end up getting an exit signal on the Dow yesterday from the time transformation system, from the time transformation indicator. We are slumping a little bit here, however, not seeing a massive sell-off on the Dow, certainly taking a breather in anticipation of the Fed's interest rate decision. Looking at the Qs, we have the opposite. Criff, by the way, thanks for the sub over there on YouTube. We have a gap to the upside here on the NASDAQ as the tech sector continues to boom. We did get a nice time transformation exit signal over here and a potential continuation signal. However, I tend to ignore continuation signals in overbought territory, but that did occur on the 5th following that exit signal on the 4th. And that's okay. Listen, this thing gave and gave and gave and gave and gave. Beautiful NASDAQ longs all the way up to the top with good profit taking opportunities and great continuation trades all the way up. And I am happy to miss this ultra froth area. Quite happy. Looking at the SPY, again, exit signal on yesterday's daily candle close, following this last continuation signal to the upside here, this last move to the upside, and we are flat on the SPY. Not a massive dump, but no continuation thus far. The only thing looking positive is the overall tech sector and the NASDAQ, as it should, right? This is the herding effect. This is the trending effect. Taking a look at VIX, VIX is not moving very far. In fact, VIX declining a little bit today, having a gap, not a big gap on the VIX, but overall, I think that VIX likely is a good straddled play. You can long VIX and do put options. You can short VIX and take long call options. There's a lot of different ways to do this. Looking at commodities. We had a nice gap up on DBA today, but so far back down a little bit more in the negative. So overall, right a little bit below break even on my DBA trade. Nothing so far that I'm concerned about or really looking at so far with DBA, but I'll keep you guys updated. Let's see here. Nothing else. I am out of corn. Let's see here. PDBC giving a overbought continuation signal. USO is one that I'm potentially considering, but nothing to do right now. Nothing with crude. I will not lie. Up gasoline is one that I am kind of interested in, but it does not kind of fit the metrics. It would be discretionary if I took it, and I'm just not there where I want to be taking discretion in traditional markets right now due to aforementioned froth. Right, copper and metals do well, although nickel having a little bit of a pullback. The overall metal sub-index pulling back a little bit. Aluminum going flat after that sell signal after I got out in profit. Tin not trading. Let's see, LD okay. These aren't even open today. Let's see here, GLD. Nice gap to the upside, but so far sold back down to the baseline. Nothing out of GLD, nothing out of our paper ETFs right now. For silver, More platinum. And palladium remains right here, right at the baseline. All right, let's see here. And overall, this is shaping up to be a losing trade for me, unfortunately. This latest palladium ETF trade that I took. You know, and I knew it when I entered it, right? I saw the declining volume when I entered into this trade. But I took the signal. Money flow was good. TSI was good. TT was good. But we just got kind of chopped right back up again, right? Just this kind of, you know, descending trend line did end up being acted upon by the markets, and we are right back down. Now, I'm of a mind to hold this open and see what happens come tomorrow or the next 2 days. Because again, nice tight consolidation. And so if I'm patient, I can wait for the swing to the upside. But again, I've got my stop loss for a reason. So that's about it for indices. Let's look at my, yesterday I ended up, let's see here. My big Forex trades of this week, really the last few weeks I let run for quite a while, was the Kiwi dollar. I ended up taking profit on the Kiwi dollar yesterday. The Canadian yen, I ended up taking profit on a few days ago. So I basically was able to sell the top on the Canadian yen. So very good trade. AUD NZD, Aussie Kiwi. Aussie Kiwi hit take profit 1 on yesterday's wick to the downside. Now putting in not really a reversal candle, just a green candle on today, not closing above yesterday's open. So we'll kind of watch for that. But so far, no exit signal from the system. In fact, DMF just now going negative. So I kind of like that. And the euro pound, short on the euro pound. So overall, I don't really have a lot of risk on in the markets. I don't have a lot of risk on in the markets. And I've had, you know, a good streak so far, up about 8% P&L, or excuse me, up about 8% ROI on my total account so far this month. And now I am looking at a little bit of drawdown with the palladium trade and DBA. But other than that, things are pretty good. Aussie Kiwi was good, and euro pound is my only exposure in the Forex markets currently. And then Alex is handling the altcoin markets with our allocate. I just keep ripping this shirt, unfortunately. I'm sorry, guys. I love this shirt. Let's take a scan through the Forex here today together. Don't really see anything coming in from Aussie pairs. A little bit too overbought for me, a little too frothy to be looking for continuation entries. We'll see if they can give a little bit of a pullback. Swissy yen, I'd be of a mind to take if we were to get continuation here. Euro Aussie, I would be looking to trade this to the short side, but nothing today. Same for the Euro Canadian, nothing today. But again, just kind of scroll back on the Euro Canadian. That is a chart you do not want to trade. Stay away. But I will say that the trend, when it emerges, should be quite nice. When it emerges. Euro Kiwi, I'd be looking to trade this to the downside, as well as the Euro Pound. The Euro Yen, I would be looking to trade this to the upside, but I'm not going to be trading against the rest of the Euro directional trades here. So, Euro Dollar looking like we're going to get a little bit of a continuation here. Good volume continuing to pour in. A little bit overbought for me, but those who are a little bit more risk tolerant might be looking for continuations in the Euro Dollar. Pound Kiwi got a nice exit signal yesterday, so I would not be looking to do anything with the Pound Kiwi until objective re-entry. Pound Canadian might be shifting trend. Pound Swissy, nothing to do. Pound Yen, nothing to do. Pound Dollar continuing on a nice uptrend. The Pound Aussie, I'd be looking to short, but we are coming off of a take profit signal over the last 2 days, so nothing to do right now. As I said, I took profit on the Kiwi Dollar, Kiwi Canadian. Kiwi Swissy gave an exit signal in yesterday's candle, as did the Kiwi Yen. The Dollar Canadian gave a take profit signal on yesterday's candle, so I would be out of that. The Dollar Swissy is the trade that I certainly missed because this should have been my trade all day long. But doing well, the Dollar Swissy doing well at the downside, as well as the Dollar Yen. Now, the Dollar Yen was not a trade that I should have taken. However, the dollar is falling off as we kind of talked about. And the Dollar UN continuing to fall off the face of the map there. So looking good. Dollar pairs to the downside and Euro pairs to the downside and potentially Australian pairs and Kiwi pairs continuing on to the upside overall. But again, take your market by market very carefully here. Let's look at our precious metals. Zao hinting at a little bit more upside here, but we're just too far away. We need to be patient for continuation on gold. Therefore, I remain flat. Palladium was the last thing to give us a potential long signal. However, that's not working out very well for us as we did get right back into the chop here. Silver. it's going to take a while for us to be going long on silver again. Price is looking good at $18. Still a good area to stack physical, in my opinion. But I'll be taking a breather on CFD longs until the stars align here again. Same for platinum, waiting for the stars to align. Let's see here. And looking at the NASDAQ, CFD, again, good continuation. The US 2000 giving that exit signal, and the SPX 500 giving that exit signal yesterday. And let's look at Mr. Bentley Crude. Exit signal, nice continuation move on Bentley Crude as of right here, but exit signal on the candle closed 2 days ago, and nothing to do as of right now. However, I would be of a mind to take crude oil to the upside looking at the CFD. And natural gas, I think, one to watch, in my opinion. I think that about covers it. Yeah, that's about everything. Covered the majority of the markets. Back to Bitcoin here, briefly. What a surprise. Rejection at resistance. Yay, we've never seen this before. Anyways, thank you guys so much for the support. If you guys enjoy the technical analysis, if you guys enjoy the content, make sure to subscribe to the channel if you have not already, and smash the like button. Let's see if we can get there, guys. I know we can do it. It does help get the word out there. And this is a time when I think more and more retail traders need to be building objective systems and not listening to what they're hearing on Main Street media. Otherwise, they're going to get slaughtered as they normally do. Objective system buildings is the new counterculture, guys. This is the new counterculture. There are links down in the description if you'd like to support us. One way that you can support us, if you want, is by making the switch. Stop getting wicked out on BitMEX. We like to trade on ByBit. So let's go see our friend. Let's go see junior analyst Jason and see how his experience is on ByBit before we get into today's news segment. Let's go. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at ByBit.crackingcryptocurrency.com and rest easy for a change. Such good editing work on that. Such good editing work. All right. Let's get into today's cryptocurrency segment. I want to cover I want to cover altcoin valuations and kind of the overall froth in the altcoin marketplace and how this correlates to Bitcoin's prices. That's going to be our main story of the day. So let's get going with our cryptocurrency segment. Boom, boom. All right. First story today comes from the Bitcoinist. We're going to be talking about the title of this article is Why Bitcoin Could Get a Strong Boost as Altcoin Valuations Become Frothy. Yes, and Monday's show was titled Who Ordered Some Froth? So since the beginning of 2020, Bitcoin has certainly had a big spotlight pointed on it, right? We've had strong price action before the March meltdown, following the March meltdown. And honestly, it seems like the narrative for it feels like the last year almost of Bitcoin price action completely overshadowing altcoins entirely, right? The days of 2018 are gone and there was a new sheriff in town, right? But, as we know, the direction of Bitcoin and the nature of Bitcoin's price action often decides how the altcoin markets are going to move and or trend, if they do at all, as all ships kind of rise and fall with the tide of Bitcoin, right? But obviously, as we've seen, Bitcoin has been in a consolidation phase for the last few weeks, and altcoins have outperformed Bitcoin, which has been trapped under $10,000. So the main focus of this article is looking at one commentator and his opinion that this is a catalyst that is going to send Bitcoin's price upwards into Bitcoin, that we're going to see Bitcoin price appreciation in the upcoming months. All right, so this is Ceteris Paribus, right? So he shared this following chart. We're going to be talking about this. So this is Bitcoin perpetual futures against mid-perp, alt-perp, and shit-perp, something that I know senior analyst Alexander watches quite a lot, right? And this shows the crypto market's performance since the start of the year, plotting Bitcoin against small-cap altcoins, medium-cap altcoins, and large-cap altcoins, respectively, all right? Now, all assets are trending almost identically, as we can see here, in March, prior to the capitulation event, the March meltdown, right, where BitMEX basically crashed the market. Now, altcoins have, but since then, altcoins have strongly outperformed Bitcoin since. Right, so much so that the small cap altcoin index from FTX, the shitperp, is up 80% since the start of the year, while Bitcoin is up only 33%, right? It's a very good return, but quite different, right? And again, risk to return to all this, but among the altcoins showing major strength in this rally, three tokens stand out, right? Kyber Network, Loopring, and Lend, right? From Kyber Network's KNC DeFi platform, Loopring's LRC. These are all DeFi platforms, right? These have seen, let's say, fairly parabolic appreciation since the start of this year. Now, these particular DeFi tokens seem to be benefiting from growth in Ethereum, of course, both in terms of the price of Ethereum and active users on the blockchain, as well as the general hype surrounding DeFi as the crowning jewel in the Ethereum use case. We've obviously covered this quite a bit, but obviously we've got Ethereum 2.0 coming out and DeFi being, kind of blossoming in use case, honestly. So this becoming very popular and a good fundamental for this. But, hotly, and, we could say, ETH competitor Cardano and their ADA token have also seen some pretty good gains over recent weeks as well as a direct competitor to Ethereum, right? In just the past 3 weeks, ADA's up almost 80%. And we could say that this is due to developments in Cardano's upgrades to the Shelley mainnet, the much desired, much vaunted, hotly anticipated Shelley mainnet, right? Ethereum over that same time period put in a gain of only 30%. And this outpaced just about all other large cap cryptos because Ethereum 2.0 and word that it's preparing to finally roll out this year is attracting a pretty big wave of buying ahead of Ethereum's move to proof of stake consensus, right? Nano, which was previously a mid-cap cryptocurrency, has shot up to a nearly $200 million market cap recently, putting in major gains day over day. Nano's up over 100% over the past 4 weeks. Nano was also a part of my altcoin portfolio that I published several months ago. This is where Bitcoin enters the picture, though, and stands to benefit, as money made through altcoins tends to cycle back into Bitcoin, right? And I've talked about this cycle many, many times, right? Money flows into Bitcoin, then Bitcoin consolidates or enters an area where it's range trading, and then money flows into large caps, then mid caps, then shit caps, and then back into Bitcoin. Everything dumps relative to Bitcoin, and Bitcoin moves up or down, takes a massive movement, right? And this is, this makes a lot of sense, right? You're speculating on Bitcoin. You see Bitcoin's boring. You move into something else that's more volatile. You go where the volatility goes. This is what traders do, right? So traders and investors want to secure profits and catch the next movement on Bitcoin ahead of its own bull cycle or bear cycle, depending on which direction they want to trade in, right? All right. Now, here we go. Here's the response, right? From Spartan Black. This is Co. He's a former Goldman Sachs partner, and he's head of Spartan Group. Chimed in on this trend in the cryptocurrency markets, and he wrote this. So I'm going to quote from this. We have seen a major re-rating in many of the smaller altcoins, especially DeFi ones, in the past 4 to 5 weeks, while Bitcoin has been range bound. At some point, the valuation of these alts will start to look frothy, and the capital will flow back to Bitcoin. And he's, of course, referring to basically what I just mentioned, this pattern among cryptocurrency traders and investors, right? Once they realize that altcoins are overvalued and they do not want to be holding the bag at the very top, we see this huge, it's almost immediate, this exodus back into Bitcoin as a way to hedge against downside risk while still maintaining exposure to cryptocurrency. If you want to be long cryptocurrency in general, it's safer to be long Bitcoin than altcoins. Now, altcoin markets, after all, have been referred to by many as one great big cryptocurrency casino, right? Where whales bring their Bitcoin chips with the goal of ultimately increasing their overall BTC stack, and many approach the markets and the altcoin markets in this exact same way, right? And if you are, if you're successful to ride a bullish wave in smaller cap coins, then you're going to end up rebalancing your portfolio back into Bitcoin, hopefully just in time to catch the next major appreciation cycle, right? So, ultimately, these are trends to watch out for. I think that this is a cycle that is old as, it's not really old. This has certainly been a trend for the last, in my experience, the last 3 years. But what do you guys think, right? Do you think that your altcoin portfolio is beginning to look frothy as of late? And I have to point out here, right, that it always concerns me when I start seeing, it's interesting, right? I'm just now starting, I talked about this yesterday. I'm starting to see like lots of activity on crypto Twitter and other places that I kind of monitor and observe. All of these long-term fundamental charts, looking at like monthly charts and weekly charts and 3-day charts of like altcoins trading against BTC and talking about how, we're entering into alt season, right? And I have seen this so many times and it has never been true, not once, right? And it's almost always right at this point in time when things turn around. Now, I could be wrong about that, but just saying. So what do you guys think? Do you guys, you guys are probably holding altcoins. Is your portfolio starting to look pretty frothy? Have you taken profit? Or are you looking to take profit off of the gains on some of your altcoin movers or DeFi tokens that you've generated in recent weeks? Or are you all in? You all in on alts and you're looking to take your bags all the way to the moon, 2018 all over again, baby. And Bitcoin's going to be stuck and range bound for the next few months. Be sure to let us know in the comments section down below. All right. With that being said, let's hop back into the live scene. Thank you guys so much for the cryptocurrency support. And there we go, Bitcoin. Let's go, Bitcoin. Let's see if we can get the guys on for a brief foray into what we just covered today. Give me just a moment. All right, here we go. I am joined, as usual, by we've got Mr. Senior Analyst Alexander. We've got Junior Analyst Jason. We've got Contributor. We've got Dark Rico in the house. Every time, Alex. Every time. Anyways, how are you guys doing today? Hopefully you're doing awesome.
I'm good. Thank you.
Another day, another Satoshi.
Good, thank you.
Here's that. Let's see what kind of volume we can get on this pump here.
Pretty good so far. 98.11. And price, price still showing in backwardation, so people still trying to sell it.
I love as soon as
That's a good sign for it.
$30. Yeah, and I do believe open interest is rising as well.
Peckham, I love you, brother, but this is not mooning.
I love it when people say like a $30 movement and like we're to the moon, baby.
That's when you know like someone needs to zoom out.
Yeah.
I mean, if you look, I'm on the 1 second chart.
It's gotta look incredible.
We are mooning.
Sell it all. Sell your house. Buy Bitcoin. I don't think it'll dump. I think this is gonna sustain. For
This
a
is
while.
this is the one.
A user had a question: where should they buy Bitcoin so that there's less of a chance that the exchange is going to rat them out?
don't know
I
if
think
that's
you're
possible.
SOL buying
I don't know
from
if it's
any
possible
exchange whatsoever. Maybe peer-to-peer Bitcoin buying. Local Bitcoins no longer has cash-only options. You have to do KYC, so local Bitcoins is out. Does Paxful allow cash transactions for peer-to-peer Bitcoin? Is there any good option, Justin?
I don't know. Yeah, I mean, you hit the nail on the head. Like person to person cash for Well, you don't have to do it cash, but just person to person, like buying Bitcoin personally from somebody that you know, is the safest, most anonymous way to acquire Bitcoin. Actually, that's the second safest, most anonymous way to acquire Bitcoin, because in that scenario, one person knows your personal identity. The safest, most secure way to acquire Bitcoin is to mine it. Or you can create an online persona or identity and earn it in return for goods or services or labor, which you can do pseudonymously or completely anonymously, depending on your OPSEC. But
you can also start an Elon Musk scam and do that on Twitter.
Yeah. No, just start up a YouTube channel, right? Just like go get a video. Just go get a video of like anybody influential, and just run that live stream and just put a donation link down there and tell them, that seems to be the easiest way to get cryptocurrency nowadays. This is ridiculous.
I'm Anthony Pompliano. You may remember me from such tweets as...
Yeah, we should do like an Ethereum 3.0 scam.
Mm.
Before 2.0 is even released. I bet people would still do it.
Good old Tron 4.0 scam. And the Tron 3.0 scam. And the Tron 2.0 scam. And the Tron 1.0 scam.
And the Tron, the ICO scam.
Yo, guys,
Was that
another way to potentially get your Bitcoin with minimal KYC, maybe Bitcoin ATMs. That's potentially another way. Yes,
I've never used one of those. Do they take your ID?
Some ATMs do KYC. They do ask you to present ID. Creative people might be able to kind of find a workaround to that. So I think Bitcoin ATMs do.
This is not legal advice.
Cameras.
I also think there's another local Bitcoin competitor that's come out to kind of fill the gap of the local Bitcoin ditch the cash transaction. I think it's coinflip.com. Don't quote me on this, guys.
Quote.
I don't think maybe it's not CoinFlip. Hold on. I gotta find it. I don't remember off the top of my head, but I do know, like I said, there is a local Bitcoin competitor that's trying to fill that cash gap. So there's probably a few options out there, but yeah, you're gonna be hard pressed to really get the Bitcoin off the radar these days.
Well, my understanding is that the unfortunate truth is that local Bitcoins, apparently 95% of their transactions were not cash. It was maybe just 5%. And when they banned it, it basically didn't change their platform at all. So the unfortunate truth is that most people in cryptocurrency kind of don't care about their Bitcoin privacy.
It is still possible out there. I mean, the first step, and I've said this before, the first step is if you go to your local Bitcoin meetups, right? Connect with individuals on localbitcoins.com. You have to meet an individual that's willing to do that for you. And that's a personal relationship between you and... I didn't want to use the word dealer here, but I guess that's the correct word, right? You're
a broker.
Well, they're not a broker, but you get the point.
Broker in the
your friendly street corner broker.
Hey, come on, bring your Bitcoin. I did see a tweet there today that someone had stolen a Bitcoin ATM trying to get the coins out of it.
Yeah, that was great. That was so good. Maybe there was a little bit of, maybe if they try really hard, there was maybe some private key dust, left in ink on some of the paper. Yeah.
Private key toner dust. That is hilarious. Was it the little quote was just adoption? Yeah,
that's what Payday said. He said, "Yeah, this is true signs of adoption here."
You got to pick.
Yeah, I mean, even if thieves
behind it,
if even thieves think Bitcoin is money, then Bitcoin must be money,
right? And throughout time, thieves have always been ahead of the curve. Criminals have.
I found the link to coinflip.tech.
There you go.
They're
T-Dub did
although they
chime in
seem to be
there.
a Bitcoin ATM provider in the U.S. So if you're a U.S. Citizen, I'm going to post a link right now to the live chat. Check that out. Coinflip.tech, supposedly KYC free ATMs for Bitcoin in the U.S. If you're outside the U.S., again, just look for Bitcoin ATMs in your area. You probably be able to get your hands on Bitcoin with minimal KYC.
I bet this won't last more than a year or two before they get ordered to start doing
agree.
KYC or
It'll
have
be
to, have to
it'll
close
be
the company.
illegal
Yeah.
not to.
Well, the high street cameras will be able to pick up who actually did the transaction at that time from the ATM.
Well, someone was just asking about that. At this point in society, you can just wear a mask. Thankfully, where like no one's going to question if you're wearing a mask. So
That's true.
I wanted to thank GBU Professor Wally for the $10 super chat. Thank you so much, my friend. He said Coinbase rewards have zero history. Just saying.
Speaking of Bitcoin ATMs, Justin, check your DM.
Hold on. Yeah, just one sec. I know that I read an article this morning that said that Coinbase had reduced rewards for things that they offered. Like I know they offered some staking and some product services for holding tokens on their platform. They reduced those rewards by like 90% this morning, and this certainly has to be due to the exodus. It's really interesting to see the profit motives of exchanges, because whether you want to believe it or not, exchanges when you deposit, if you have a lot of cryptocurrency, you can do things, right? Like you can stake, you can act as a validator, you can run master nodes. So all of these exchanges have all of these tokens on deposits, and I think people are silly if they don't think that just look at what we uncovered this with the story of Justin Sun and Steem, right? The exchanges with Steem on deposit, formed validator nodes and rewrote the chain. So all kinds of ways that exchanges are earning profits. More reason to hold your funds in cold storage.
it was a USDC staking that was decreased by 90%.
USDT
And USDC, yeah, USDC. That entire Steam situation is why DPoS is just dead on arrival. Every distributed proof of stake chain, I mean, it's proven. Like all it takes is like you're an investor and someone in another country does something shady and your investment is gone. That's distributed proof of stake now. In anybody's mind, that should be your number one thought. Something just render the entire investment just worthless.
You have to elaborate that on about that a little bit. What do you mean?
Okay, so let's say you're an investor who believes in X blockchain product that does X thing. They've got a team that's working on this stuff. What their aims are, what the company's prospectus is. You've got a good idea of what you're investing in. I don't know if it's like a smart investment or whatever, but like you at least what that is. Someone in China, or like maybe another country, but let's just say China because China has been doing this. Someone in China starts accumulating the coin, and then eventually they have enough of it that they have a large stake in it. They begin to make deals with other exchanges. They hold a lot of these tokens by virtue of being an exchange. People trade and stuff on their platform. So being holders of these tokens, exchanges automatically become majority vote holders in these blockchain projects. So automatically, by their nature, these projects concentrate power into the hands of like the financial industry, essentially. There's financialization has happened to lots of industries, but in this case, it's the natural result of this particular style of blockchain governance. And I think, can you back me up on this, or do you agree, disagree, Justin?
Sorry, I was looking to see if I can make $1 million on Ravencoin here. From what I took away, you're saying that the problem with investing in some of these tokens is that anybody anywhere can easily acquire a large stake, which I think was exactly what I was pointing out in exchanges, correct?
Yes. Yeah, Jack didn't really understand why it was a big issue.
I just wanted you to clarify a little bit. Yeah, I mean, delegated proof of stake in particular does have certain issues that we've seen demonstrated. Steam being one of them, and EOS is another one that's experiencing has a lot of friction in the community right now about Chinese concentration, right? But to play devil's advocate here for a minute, if it's a majority of Chinese investors that bought into EOS, if they hold the majority of the bags, if say it's a small community of Chinese investors that hold the majority of the bags, it's unfortunate, but maybe they paid for that privilege, right? As the primary investors, that's what you bought into, and the rest of us, if you're a small fish, sharing space with these big Chinese whales, that was maybe not completely evident going into it, but it's kind of the nature, particularly with delegated proof of stake, that just like mining can centralize, so can the stake can centralize among certain crowds. So it's kind of
happen in any asset class.
Delegated proof of stake is uniquely vulnerable to
distributed
this, right?
proof of stake is different from proof of stake. Let's be very clear here.
Absolutely. Although in these cases, we're talking about DPoS, like Steam was an example of a delegated,
yes.
Yeah, delegated proof of stake that had this particular issue, right? And to a lesser degree, this might affect all proof of stake chains to some degree. It is part of like the game theory of how they secure the network. But I agree. I mean, I'm not gonna lie, Alex. If we have like two leading crypto examples of DPoS being kind of an utter failure, what we see happening with EOS and certainly Steam, it kind of demonstrates that, right?
Yeah, well, Steam is the prime example. If someone can just come along and take over the blockchain project and be like, no, we're doing something different right now, and whatever you thought you were investing in before, that's not what we're doing anymore. Like boom, your investment just evaporated.
Yeah.
That required a dramatic amount of collusion, of course, right? It did require major crypto industry bigwigs kind of coming together and foisting that plan on.
Now, we never see collusion amongst large financial powers.
Right, precisely. It goes to show you that these are the kind of it's one part the architecture of the blockchain, and it's one part how the industry is structured right now, right? So it did require an overwhelming effort by a bunch of industry insiders to perpetrate that crazy maneuver that they made on Steam.
Well, and that's just it. It didn't really require overwhelming effort. It was actually fairly simple. It seems in the end, and I think that's what makes just the entire distributed proof of stake just dead on arrival.
Well, I think with that particular example, it's worth drilling in a little bit because a couple things. It probably wasn't that difficult. Like Justin's son had to pull some levers. We could speculate on how easy or how hard that was. Like maybe the dude was like all laid up on his couch and pulled open his phone and was like, "Yo, what's up, Bittrex, man? CZ, hook it up, man. Just like, do my thing." And it was like that easy, he's like in the bubble bath, masterminding this strategy. Or maybe he had to like do some serious convincing and do some traveling, and meanwhile avoiding like the CCP, which is trying to like, re-abduct him clearly. Secondly, I wanted to look at something. I wanted to go back to something I think Richard just said, which was interesting and was kind of glossed over, but he said, this is kind of true of any asset class. Well, this is certainly true of any asset class with implied where you can purchase ownership, right? So we just watched Wall Street on Saturday for the the community for movie night, for the Kraken cryptocurrency movie night, and there's a good example, although it's a dramatization, but this of course happens all the time. They call these what's the word, kind of evangelist investors, or
Angel investor,
no,
venture capitalist.
well, where you take over, where you take over a company to restructure it by purchasing the majority of its stock, and you become the largest stockholder. Hostile, yeah, but there's a
Activist investor.
Activist investor. That's it. Yeah, activist investor. So Gordon Gekko in that example became the largest shareholder in Tevlar Paper by purchasing the majority of the stock, and he basically, although it's slightly different, the only difference here is that with cryptocurrency, we're talking about blockchain, where if you have the majority of either the hashing power, or if you can control the validating nodes, then you can influence the code of the blockchain or consensus, and therefore make direct financial changes. With stocks, it's really no different. You don't have as much direct control. Like, you can't just buy all the stock of a company and say, we're now doing this. But you certainly can depose the board members, call for them to be fired, switch around management, put in who you want, and just keep doing that until you eventually get enough sycophants in there that will push your agenda, right? Now, the other difference here too is that these analogies are important, because in that example, you could say, well, but we got the SEC and watchdog agencies and, all of these different protection fail-safes. That's absolutely right. And the free market does that too. So this is why, even though Bitcoin is proof of work, there are so many more safeguards for the Bitcoin consensus mechanism that go beyond just hash rate, because you have the developers, you have the users, you have node operators, where there's over 112,000 full node operators around the entire world, and it's quite distributed, actually, quite decentralized in full node operation. And miners aren't going to be able to push anything past what the full node operators allow. The reason why you have so much, I would say, watchdog protection on the Bitcoin hash rate, or the Bitcoin proof of work consensus, is because there's a massive financial incentive, right? For lots and lots of people. Lots of people have millions of dollars invested in Bitcoin, hundreds of thousands of dollars, small investors, big investors, exchanges, companies, corporations. So there's this massive incentive to keep everything stable, because nobody wants to go broke. With Steam, you had a handful of 100,000 heirs, you know what I mean? Maybe a small handful of millionaires. Nobody really gave a crap, right? No offense, I liked the Steam platform, but you just didn't have enough financial motivation or financial incentive to secure the network beyond the kind of the Steam elites, right? Because you just didn't have enough, distribution of the currency. You didn't have enough individuals. You didn't have enough 100,000 heirs, right? You get you some 100,000 heirs in there, you know what I mean? You get a couple hundred of them, and you get a secure network. But I think that Steam is kind of a victim of a lot of altcoin blockchains. Not that, not in price, completely divorced from price, but in functionality. Nobody is really using it. So there's less financial incentive. It's just not distributed or decentralized enough. This is one of my main arguments when I talk about altcoin fundamentals versus Bitcoin fundamentals. I got a video about this in the Trading Crypto 101 section, where I emphasize the first mover advantage of Bitcoin. Bitcoin got sufficiently decentralized, not just in protocol distribution and code distribution and mining distribution, but in valuation distribution. There's so many people with skin in the game in Bitcoin now that have been in it for so long, whereas, not too many people hold Steam,
This is what boils down to it, really, is market cap. At the moment, everything is quite small.
Yep.
I would add that part of the issue is governance, right? Because again, with proof of stake, you do have these governance models, and part of it is a lack of engagement of most users, right? It's nice to have this governance model where everyone has a proportional stake in the network, has a proportional democratic kind of influence on the network. But if the vast majority of people don't engage in that democratic governance process on the chain, it basically leaves the game wide open to either a single whale can outvote or outgovern million users who neglect to engage on that level, right? And the same thing with EOS is there's a lot of wallets, there's billions of dollars on the EOS network, but very few people really engage in keeping their funds in the private wallet from which they can govern and vote on blockchain affairs with. And we are in the world where not much utility for these coins, and most of it's speculation. Therefore, most people leave their coins on an exchange. And what we saw happen with Steam was, the coins that were on exchanges, a huge pool of liquidity of coins on the exchanges, could have been tapped for the purpose of governance, right? And so governance is a really useful feature on these chains. But if users are just going to leave the coins to be potentially used to be voted on by bigger powers, it kind of defeats the purpose, right? So again, convenient features, but if they're neglected, if they're not used, it just opens up the feature for someone else to exploit. So I think that's kind of what we saw here.
I'd
Get those
actually like to point out
get those market
that,
buys
come
in,
to think of
boys.
it-
Alex, what were you saying?
That come to think of it, distributed proof of stake is not all that different from the way current traditional equities markets have common stock, and the common stock is often held largely by large financial interests like, let's say a BlackRock or Renaissance Trading, stuff like that. Who they take these large billion-dollar positions in these companies for their investors. But they are actually the ones, obviously, who have the voting rights and not the individual investors in their companies. So it's largely the same.
Oh, it totally is. And
Yeah, it's very comparable.
the disappointing aspect is that blockchain kind of allows a different level of accountability, or engagement from individual investors. But at the same time, clearly most of the community has signaled that they're not going to take advantage of those features. So it's convenient. It sounds like, oh, this solves that problem, but is it really a problem that needs solving? If the majority of people aren't going to engage in these types of matters, then it's just, again, it's ripe for someone else to exploit, right? So until we get like the mass of people not just holding the coin but really engaged in the community and voting and vocal about issues, then this stuff makes sense. Being able to decentralize power and really give it to the small guy works great. But if the small guy is just gonna sleep on that, then
And
it's just one big disappointment.
You should have been the spokesman for democracy.
Well, good thing that I'm actually not very, I wouldn't be the guy to advocate for democracy. I don't necessarily believe in that.
Big liquidations. You guys are sleeping. You guys are.
No, we're not. We're just not worried about it, bud. You know how it goes.
Yeah, this is true.
Let the market do what
We're
it's gonna
right
do.
side of the market.
And guess what? We've done the work ahead of time to where we put ourselves in positions to where we can sit back and have ridiculous conversations with each other.
That should be TP2 on my Bitcoin long right there, and we just hit the second. We just hit all 25x shorts.
Oh.
All 25x shorts are liquidated. So
It's not classify as Moon yet, Peckham. No. Moon will always be, like, the perspective of the time, because Bitcoin could be at 100,000 and people will still be waiting for a Moon.
Robert's like, your audience is worried about it though.
Well, we got it on the screen. What do you want us to do? Sell it off?
Cater to them.
But it was one of those things, like, I wanted to mention that.
Man, do you see the price divergence on BitMax here? This is crazy. Dear Lord.
Thank God it happened on stream, baby.
10,177 on BitMax.
Bottom feeder. Let's get it. I don't know. Like, I wouldn't call this the breakout of breakouts, but
Nope.
it's certainly a breakout.
This is resistance. We need to get above this area. We need to get above this area. We're just going to sell off right back down to the bottom of the range.
Yeah.
It works.
This is a dangerous area.
Danger. We're just waiting on that bottom feeder signal. hopefully that fills, and then I'll just take a nice break and check the charts to see where. I'll probably, with this kind of volatility, I'll need to let my indicators reset, but glad to be on the right side of it. Making more money just chatting with you guys than I ever did an hour at any other job.
All right, guys. Well, we've got a community mentoring session in 20 minutes where I assume we're going to be breaking this down in far more detail with the premium members. I need to go grab a spot of lunch before that and go ahead and set my 25x shorts up. And we'll be back tomorrow.
Don't tell them that.
Don't tell them.
They're going to do it now. I
Right.
believe.
You guys have any thoughts before we vamoose?
Be patient.
Don't 25 sure.
Don't make rash decisions in this volatility. You're going to end up screwing yourself. If you're in a position already, be patient with it. Don't flip-flop on it. Like, yes, this kind of volatility can be quite devastating, but we've already experienced that Darth Maulwick. I think that it would be important to be patient with this level.
Yeah.
Because you're going to regret it if you just get out and short this, and then it keeps going. And then, I mean, there's so many different ways that can go wrong for you. Patience is always the way.
Yep. Everything that he said and more.
Buy
All right.
Bitcoin.
Buy Bitcoin. All right, guys.
Wait, I'm going to call it now. Bitcoin will never be under $10,000 again.
We're going to go ahead and make a prediction right now. Never see Bitcoin below 6K. Beckham's on the 1 minute chart. He's on Mars now. Sorry, guys. Sorry to leave right in the midst of the volatility, but we got to go. We got to get back to work.
See you, everyone. Join us in the
Okay,
Discord.
guys.
Keep talking about it.
All
Cheers,
right.
guys.
Thanks for having me on, Justin.
Yeah, no problem, guys. Thank you so much for joining me today. I'll see you guys tomorrow. Well, wasn't that something there? Nice Bitcoin breakout, able to catch it live on stream. Be very careful with your positions. I do agree with everything that Jason said there. If you we focus on the higher time frames. If you're already in a directional position, don't be flip-flopping. If you're trading discretionarily, practice risk management. All right. With that being said, thank you guys so much for joining us for another exciting episode of Breaking Bitcoin Market Update. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below. We will respond to you. If you enjoy the content, make sure to subscribe to this channel on YouTube, hit the bell icon, and leave a like on today's video. We really do appreciate it. It really does help get the word out there. You can support us over on DLive or Twitch as well if you would like to do so. You can also catch us, of course, on the Roku with the Investor News Channel app. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Update. If you guys want to join us in the group and begin building your own objective trading system, links are down in the description, or you can point your browser or mobile device to premium.krakencryptocurrency.com. Other links down there for everything you could possibly need in life as well. We try to be comprehensive. Question of the day. And I think this is more germane with what we're seeing with this nice Bitcoin volatility. And we were just talking about altcoin frothiness today. So again, we asked the question in that segment, but just in case you missed it and you're tuning in now, is your altcoin portfolio starting to look frothy? Is it time to take profits and move back into Bitcoin? Let us know in the comment section down below. I'll see you guys tomorrow. Be excellent to one another. We're all in this together, and trade safely. Cheers, guys.